All right, so once again, welcome traders to today's session. Today being the 15th day of October 2020. As you're all aware, we have started again on doubling the account challenge, and this is a new challenge that we have set up for ourselves to see if we can increase our capital. We were starting with 2,000 to see at least if we could double it using increased lot size, and also maybe changing some of the strategies. Some people are using trading on 5 minutes, some on and 1 minute, and we will in the course of the presentation we'll give them a chance to one or two people to tell us the experience they have had, and maybe at the end of the presentation we'll open it up for anybody else who has been participating in the challenge to tell us what they're learning. For sure, we know that you're learning. You're better off today than you were last week, than you were when you started the first challenge, or better yet, than you were when you were a new trader. Because I think after this, if we manage to even hit 50% of our target, then I think we'll be ready to go live. It will be about time to go live. But before then, it is important that we practice the craft of turning positive pips into money. Turning positive pips into money. And what does that mean? It means that you, first of all, decide on a strategy, you develop a plan, and you stick to the plan. It also means that you learn how to balance your risk and profit. And we will be getting some testimonials from some of you who have been who have taken up the challenge and who might have realized or experienced that this probably is far much better than the initial challenge of the $1,000. And then I still get questions. We still get questions of people who are still new to this platform, or who are just new as traders, and they're just asking us, the basics on how do we set up this double account challenge. So we'll do a small recap at the end of this presentation on how to set up a $2,000 account with a leverage of 1 to 100. And then when you're taking your trade, then you decide on the lot size that you're comfortable with, from 0.01 right now to 0.05. So you'll see that some people are doing 0.02. Like myself, I am sticking to 0.02. You'll see some people, I think today I saw Jackson doing 0.04, and so on, depending on your risk appetite and how comfortable you are. Then you decide on the lot size. So just again to recap on the basics, once you know how to make positive pips, then you will always know that when the market is going up, then it's time to buy. Today I think the market has been a bit mixed up. At some point it was going down. Late in the afternoon, when I decided to test a few, I saw that it was going up. So you'll always notice something like this. So sometimes the market is going up, and when the market is going up, those are opportunities to buy. Like in this particular case, the first setup is down here on the support, and then you take profit as you're going up. The second setup is over here, and then finally the last setup before the market turns. On the other hand, if you are trading long for long today, sell opportunities. You sell when the market is up here and it intends to come down. So every time it tries to go up, you sell, you sell. and that's how you make your profit. So I want to invite one of us who has been trading on this double account challenge to share with us his testimonial, and then later I will invite Vincent to give us an overview on how to set up our $2,000 account. So I want to welcome Jackson. Please share with us what you have seen that is different on this double the 2,000 account that you think you are doing differently from when we started the first account, the first challenge of the doubling the $1,000. So karibu Jackson.
Thank you, Ken. Good evening, traders. Now, I think today is our second day in the challenge, and for sure, the parameters are a little bit different from when we were using $1,000 account. With that one, it was given the amount of capital. It meant that we were more limited. But now with 2,000, we have a bigger latitude to actually to place trades. But again, that comes with a danger, because the bigger room that we have, you may be tempted to really to want to even hand up many more more trades, because you have the capital to really to expose. That now it's another thing altogether, and that's where the risk management comes in. In fact, we have to be more careful, and we have to be more conscious that now we can land ourselves in a bigger problem than when it was a smaller account. And therefore, for me, I decided that the coach gave us a latitude to trade with a lot size of between 0.2 to 0.5, right? So me personally, I have decided that I am not unlike before when we were doing the $1,000 challenge account. I've decided that this time around I'm going to be making very calculated, moves. I'm going only to be entering the market when the opportunity is so clear that I can say with certainty over 80% that I will get it right. Yeah, you may never know, anything can happen. But sometimes when you're watching the market for some time, you can be able to see a setup actually coming up. And now when it is at the right time, when now it is about to break out, then you stand a better chance. So personally, I've been using 0.04 lot size, and I have been making few trades. At any one time, I've not been exceeding 20 trades whenever I get the opportunity, which again, it is not every other time like today. When initially in the morning hours, the market was just consolidating, around the box. If you had drawn your box in the morning, and by the way, that box, I think it's something that we must always make an habit of drawing it. Yeah, this box from around 9:30 backwards, maybe about on 30 minutes time frame, maybe about 7-8 candles backwards from 9:30. It gives you an idea such that whenever the trend will go up or down beyond the upper limit and the lower limit of the box, then it can give you an indication that actually now the market is really moving either downwards or upwards. Yeah. So if it keeps dancing around that place, you have to be very careful, extremely careful, because from my past experience, what I've known is that when you start making those early trades there within the box, when the market will move, whichever way, either up or down, and you are left there with the trades which have not actually materialized, then now you will start running into trouble, because once it goes, it is gone, and I can assure you that you'll find yourself absorbing too many losses. So it is better, and from what I've learned over the time, I would rather play very safe while while it is still playing within the box, until when now it breaks out. And even the breaking out, you ought to be very careful. Don't just wait immediately it breaks out like today it did. It tried to break out to move downwards, down below the lower limit of the box, but again it came up. So you also have to be careful, so that when now clearly there is a breakout, that is the time now you can be able to actually enter your trades without hesitation, and with the certainty that you are going to get you are going to get your pips without worry, right? So for me, what I've been doing yesterday and today, I've been doing much of watching than trading. Yeah, we need to adapt that habit of we just don't jump into because there is some action. Don't just jump into action because the market seems to be moving up and down, right? After doing your analysis, after doing your looking at the long-term trend, after looking at the market structure, looking at the various supports and the supports and the resistance lines where they are, if you invest more time in doing that, I assure you that it is going to be very helpful, because once you know where the significant zones are, you will be careful as even as the trend moves, because even if the trend is moving upwards or downwards, it will reach a point. So how do you know which point do you stop buying? Yeah, it is these resistance and support lines. They are very critical. If we keep eyes on them as you do your buys or sells, as it moves towards those particular zones, then you have to go slow. You let it go, let it reach there, let it retrace if it may. Yeah, let it retrace, and if once it retraces, if it starts again moving on the direction that actually the trend is moving, then now again we can get into action. Yeah, so this is a game of tactic, and you have to develop a plan, and you have to know when actually to strike and when to hold back. Yeah, and the times to strike, they should be actually, you need very few. By the way, you need just about 20 minutes of actual trading, just about 20 minutes of actual trading when now the clear opportunities arise. The rest of the time, just watch the market, watch it, analyze it, look at it, what is it trying to do, and once it is clear in your mind, now finally it is moving, that is the time to get in. Yeah, so if we try that, I think dear traders, we will improve much. We'll do away with absorbing unnecessary losses in our trading. Yeah, and something else also that I think I noticed today, because mostly actually the trend today was going down. The trend was going down, and whenever it is going down or upwards, of course it goes up, and there's what we call a retracement. It comes down. I think I would wish to suggest that we avoid as much as we can in trading in the retracements. Retracements are very tricky, and those ones they'll knock you off your balance. If the trend you have seen that is actually going up, let it go up. If it retraces, know that it will retrace, and again it will start going up. So when it is retracing, do not start again now. Change. If you are buying, you now start changing into sales. You will be left actually with whatever with the trades which are incurring losses. So let's just stick to one side. If today I'm buying, let's just go buying. Yeah, if it is selling, let's stick to that. I think that way we will minimize finding ourselves in those kind of corners whereby we are far, the trend goes the opposite direction from our buys or sales. Okay, thank you so much. I think that's the little that I may want to share for now. Ken, over to you.
Thank you, Jackson. I noticed that you trade now in the 5 minutes, and you've increased also your take profit. How is that different from when you were trading the 1 minute? What do you use to determine direction what gives you an indication of the market structure? And how is 5 minutes? Is it too slow? Do you get bored? What was your experience?
Okay, yeah, that's a good question. No. For sure, I'm enjoying using 5 minutes. The 1 minute thing sometimes it tends to be too fast, and to catch up with it sometimes it used to throw me off. My course. So the 5 minutes is what I'm using for trading. I'm using 30 minutes for determination of the market structure, and of course 1 hour, one of the upper time frames. Of course, I use 1 hour, 4 hours for determination. Looking at stepping back, that is you step back for some time and have a bird's eye view of the market. How has the trend been going, so that you remain grounded and you remain at the back of your mind as you place your sales. You know that actually the market is going down, even if for a moment it may go the opposite direction. For sure it will go, because the market it behaves in a certain way, in a predictable way sometimes, though of course not always, but by and large it is predictable. Once you do your analysis well enough, you are going to it is going to give you that general bias as to which way the market will be moving. So the 5 minutes is what I'm using for trading. My pip size, I set it at 4. But again, I don't know whether it's a good practice, but this is something that also I found. Sometimes I have seen it. It has saved my skin, because sometimes when you have ended your trades and you are seeing there is yes, it is moving in the direction that you have placed your trades, but then you can see somewhere there is a resistance or a support line that actually it is the whatever the trend is likely to reach there and turn. But then before it reaches there, because you have taken the pip size is large, like five pips. It is likely to reach there, and it has not taken your profit, and it turns back. Yeah. So I found it. I found it necessary that for me to cut down the probability of actually start incurring losses. I manually go take the profits which already have been accumulated. I would rather bag 3 pips than aiming for the 4 or 5 pips, which I might even not get them. So that is something that, and probably if you look at my pip sizes, you will find that they vary a little bit. So since at the end of the day, the bottom line, it gives me a positive bottom line. I think that one, I found it saves my day sometimes. That is when it is not very clear if you can the market structures is you have analyzed it so well, and it is actually in your favor. You can let it run all the way to bag in all your 5 pips. But I don't think it is a crime if you see that it is, when you look at the where the take profit is, and when you look at the supports and those significant zones in between, I think it is better you just bag those ones. Let it give yourself time again. Let you see whether the trend will go beyond that resistance line or support. Then once it goes, then now again you can take more trades. So that is something, because this thing, the scalping requires, actually sometimes it requires you to be very alert and to make quick decisions. Unlike long-term trading, long-term trading, that one, because you handle the trades, you go your way, you don't even care what is happening, so you'll not be watching. But now here, the problem here is that you are watching, and you can see that you are about to get into trouble. So when it so happens, and it is wise that you make a quick decision if you went for the larger. Otherwise, I think it may even be safer to actually go for the smaller pips, like Ken always does. 2 pips. Those ones you are almost assured of bagging if once you enter. But the larger the pips are, then the higher the risk of us not eating them as it were. Even if you're trading with on 5 minutes time frame, that is something that I've noticed that it can also put you in trouble. Thank you, Ken.
Thank you, Jackson. Lastly, what is the best time you have found that the market usually has made up its mind whether it's going up or down? Because as you have seen that when you draw the boxes, it dances around the boxes for a while, before it decides on one particular direction. So from your experience, what have you seen? Like, what is the time generally on average? Is it 10 o'clock Kenyan time, 11 o'clock that now the market usually has decided? And from what you have seen, does it sometimes look like it goes in one direction and then it changes, especially after a London breakout? What have you observed?
Yes. Now, what I've noticed in the recent past is that if you enter the market early, when you enter the market early, be prepared to stick in the market for long, because there are trades there which you'll enter, and the market for some reason turns, and you'll keep on playing around in the market, hoping that this market will come down to, it will come down, or it will come up to come and take your profits, and therefore it holds you, it ties you down. So entering the market very early, it is not from what I've seen, because I have been evolving with the time. In fact, I used to be very punctual. By 9:30, I'm seated there and I've started my trades. Yeah, but in the recent past, I've decided no. Let even the breakout happen. Let 10 come and happen. 10:30 from around 11. From around 11, the market now has made up its mind which direction. Either by 11 you'll be able to know whether it is going to be ranging, because if by 11 it is still within the zone, the box zone, then you can be sure that prepare yourself now to deal with a ranging market, because the tactics of dealing with a ranging market is different from a breakout, a breakout market. It is different. You have to change the tactic. If it is ranging, you have to minimize. Go for 2 pips. Don't go beyond anything beyond that, because your chances of you not actually actualizing them becomes higher. But in a trading market, you can aim for 5, because the movements are, the movements are assured. You are going to hit your target. Yeah. So by 11, it is, for me, it is the time that you have to, which helps you make you know that this market is going up, this market is going down, or it will be ranging for the rest of the day, like it has been the case in the recent past. Yeah. So at around 11 Kenyan, that is East African time, I think at that time it's a good point of reference to determine whether the market is on uptrend, downtrend, or it will just be ranging within the within the consolidation zone. Thank you, Ken.
All right. Thank you very much, Jackson, for sharing with us. Now, at this juncture, I want to welcome Vincent to also give us some input on what he's been experiencing so far, whether he really likes the new tactic of the 2000 capital with the increased lot size, and then he will cap it up with just a recap for the people who still do not know how to set up an account on how to do it on CTrader. So welcome, Bona Vincent.
Thanks very much, Ken, and good evening to traders. Yeah, I started my the 2000 account today. Unfortunately, I couldn't attend the last class for some reason. So I think the first thing that I did was there's a formula which I found previously. If you take the lot size, you multiply by the number of pips times 10, it then gives you the dollar amount that you want to achieve. Then I said, okay, it's 2000. Let's say I want to achieve 3%. 3% is about $60. So I then work backwards and say, okay, for me to get $60, at 0.02 lot size, I'll need a certain number of pips. I think works out to about 300 pips, something like that. I then said, okay, how do I spread that in terms of a target that I want to achieve? Then I initially tried out. I worked out. I said, okay, if I take 20 pips on each trade, 20 pips will give me what did I get here? I think it was about 4. No, 4, something like that. Anyway, so I calculated and said, okay, let me try 20 pips. And then on the basis of what Jackson mentioned, then of course, before you enter the trade. Just as Jackson mentioned, it's important to take time actually and look at what is happening in the markets. Go to the higher time frames, make sure it's set up properly. Let me call it the medium time frame. It's set up properly, and then you go to the lower time frame that you want to enter. I used the 1 minute pipping, but my pip target was 4. And the reason why I used 4, again, once I've set up, I first measure on the market structure. I normally use those bands, and I measure the height of the band, as the market goes up and down, whether it's trending upwards, or it's trending downwards, or it's ranging. And then it tells me, okay, up and down, the price cycle is probably, say, 26 pips. So I know even if I target 4, I'm more likely to get it. But the other thing which is important also, which I think is also stressed, is once you see the market direction from the higher time frame, and what I've done, in fact, even when I'm trading the 1 minute time frame, I usually start with the 1 hour, but occasionally I go back to the 4 hour, and then I zoom out to actually see what from a bird's eye view, what the market is actually trying to, where the momentum is, and that I found has helped me quite a bit. So I go in and I take. So for instance, today I took the first set of 20 trades, but then I noticed that used the margin. The margin used was about $540 for those trades before it took profit at 0.02, but the margin level went below 500%, and I got a margin margin call warning. So the next round, I reduced the number of trades that I entered to about 15. So between 12 and 15, because I have this idea that maybe when it will be a live account, that margin call may have a bigger implication. I don't know. Maybe Coach, you'll give us some insight on that, so that one avoids taking too many trades, and then suddenly your brokers are now giving you trouble because you're taking too many trades, and there's that margin call that keep coming. Yeah, so I did that, and so today I probably did about I think about five trade entries, and I was able to reach my target. That's when and as I was looking at each time I looked at the balance compared to what we were doing before, it was markedly different. And that's why I sent a comment on the group. I said, "Wow, the lot size makes a big difference in terms of what you can actually achieve." But the other thing that I've also tried to do is, before I take a trade, for example, today the market because I was doing the GBP USD, and I saw the momentum of the market was on a sell direction. So even with the trading bands that I draw at the 1 minute 1 minute level, I trade when the market reaches the top of the band in between the stop and resistance lines. The moment it goes down to about the middle, because I've had an experience before, when it reaches the middle of the trading band, it suddenly turns. It starts going up, and you've taken some sales, and that gives you help. So I only trade when the market reaches the top of the band as it starts coming down, and I take about 2 or 3 trades and I wait. And I found that in between the trades, I give it for 5 to 8 to 10 minutes before I go in, because previously sometimes you take a trade and you see the market is the setup is okay, that you want to take another one, you take another one, and then you take the third one and the market turns. Now you have to try and deal with the potential losses, and just that causes stress for me. The other thing which I also did was I normally draw a small box just before I take the trade, say at the top of the band, if it's on a downtrend, or at the bottom if it's an uptrend. And I draw a box that is twice the height of my target. And I place and I measure and I place that box such that when the market reaches the top of the box, I take my trades there, knowing that I've got a buffer of 50% before you clear my box. And when I do that, I find that I enter, and within about a minute or probably 30 seconds, it takes a profit. So I use that box to guide me on where I should actually take the trades. The other thing which I found also important is on the 1 minute time frame, it's important to look at the previous high or the previous low, depending on where the market is. And then you make a judgment of where your take profit line should be. And I use this box. And so I enter my trades such that the take profit line does not go below the previous low, or higher than the previous high. Because sometimes if you do that and the market turns, it leaves you hanging. But if you're covered by the previous low or the previous high, the chances are much higher that you'll take profit. And then the other thing which I've also found quite important, and I think Jackson mentioned this, is now I'm more cautious. I enter two sets of trades, and I wait. I actually zoom out. I even go to the higher, the market structure time frame or higher time frame. I zoom out and I look at the market. I wait another 3 or 4 minutes, and I see exactly what the market is trying to do before again I zoom back in to try and identify the next almost like a clear trading opportunity. Yeah, I think that's basically it from my side. Then lastly, the other thing that I've done is the accounts that I had tried before and was sort of blown or went too low, I've decided to take on a challenge by itself. Apart from doing the scalping that we're doing, I've tried to give myself a challenge to use the higher time frame setup. And for instance, I have one account. I think the balance was 300. I started at 360 or so. And over the last 2 trading sessions, I've set 1 hour time frames. at I think at about 20 pips each, and I entered 10 trades. And within that, I think they've all taken profit, but over 2 days or a day or something like that. Just a challenge as part of learning, setting up the higher time frames, apart from scalping on the lower time frames. Yeah, that's what I have to say.
All right. Thank you, Vincent. I see that we have 5 minutes remaining for our chat. My suggestion is I've already set up another link. Is it possible that I share with you that on WhatsApp? Then we all log out, and then we come in, because I think Vincent wanted to show us because there's some people who have been asking on how to set up the $2,000 account, just to demonstrate on the CTrader, and then now we can open it up for Q&A, and then maybe pass it to Coach to wrap it up. Is that okay with everyone?
Yeah, it's in order.
All right, so I'm sharing the link right now, so you can just exit this one, and then we all log into the new link so that we are ready to go again for the second part of this presentation.